In today's market update video, we're going to be looking at stretch. So what is the stretch? 2, why should we trade and understand the stretch? And 3, how to trade using the stretch principle. Hi traders, thank you for joining the MTM team today and supporting us in our mission to spread the truth of trading and help you achieve consistent performance. It's Tim Naupan here, founder of Master the Markets, Illiterates Conference and the Traders Open Day. Alright, so let's dive into the topic for today, which is the stretch. Right, so now I've got this time frame correlation, time frames, where we got the daily time frame, we got the 4-hour time frame, and we got the 1-hour time frame. Okay, so before I dive into how we look at all of that, so first of all, let's just look at what does the stretch mean. What does it mean? So you see on the daily over here, right? Let's just take a look at the daily first. It's much more easier to explain the stretch on the daily bars. Especially this principle can be used for intraday trading and also for other concepts, but I'll cover that when we get into the why. So what is the stretch? So you see, for example, traders, the stretch is basically in a OHLC bar, you got the high and the low, right? If I introduce the open onto them, now what happens is that that bar is segregated into two parts now. Okay, one is this part here and one is the bigger part over there. So in relation to the open, there is a smaller range from the open, as in this example, it's going to be on the lower side to the low. And the bigger side, the bigger range from the open is going to the upside. Okay, as one of our elite clients keeps saying, he calls it bro, right? Bigger range from the open. So every day this usually happens. As you know, the only time this would not happen, where you do not have a smaller range as opposed to a bigger range from the open, when the open is right smack in the middle of the range of the bar. Okay, so if you take a look at this bottom to top move, over here you can see that in this red bar over here, the stretch is towards, or the smaller range from the open is towards the upside, isn't it? So the stretch is towards the upside. Over here, then the stretch is towards the bottom. Okay, and then over here again, it's towards the bottom. Over here, as you can see, this is Sunday bar, so forget that. Over here again, as you can see, the stretch is to the bottom. The stretch is to the bottom here as well. The stretch is to the upside, here to the bottom. So like that you can keep going. Over here is a bit more obvious. It's to the bottom, it's to the bottom, it's to the bottom. It's to the bottom here as well. So you can see out of all of this 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. Out of these 18 bars over here, traders, you can see that about 10 of them, a good majority of them, in a bottom to top move, the stretch is towards the bottom. That means the bigger range from the open is towards the upside. Now that is what is the meaning of stretch, okay? The smaller range from the open. Now that we understood this, now let's visit now why. So why should we trade the stretch? How does it actually help us? When you understand the stretch, you start to understand, when you look at the smaller time frames, that is the true raw way of how a bar forms. Okay, it's the fundamental way of how the range of a bar forms. So let me show you. So you see, for example, today, right? When you are observing it today, you are always asking yourself, where is the stretch going to form? You see, this blue line, dotted line here, is the open price. And then after that, you got the lowest part of the day today and the highest part of the day today. And this one is denoting, this pink line here, denoting the start of the day. So this is all the trading range that we've had for today. And all of that is represented by this bar over here, which is forming today and has not completed. So why should we know about the stretch? Because once you understand about the stretch, you can build strategies with a stronger edge, and also your type of trading will become more systematic, methodological, and very logical as well, because it's the fundamental way of how a bar forms. Okay, so you might say, okay, Tiru, this is all making very good sense. I can understand, I agree with you. What is the stretch? Why should we know it? Now, how do we then trade it? You see, traders, if you now understood what the stretch means, and we've done many videos on this, you will start to also agree with me that if you know what is the stretch and why it's important, every day when you're intraday trading or using this concept for any other strategy, all you will ask yourself is, where is the stretch now formed for today? Is it to the bottom or the upside? And then you would trade the BRO, the bigger range from the open, because that's where more of the range you can capture and more of the profits you can capture as well. So let's go through one by one how we would do it. The first thing I would do in terms of entry first is ask myself, okay, on the daily time frame, is it a bottom to top or top to bottom move? This one I know is a bottom to top move. So I will be looking first for the stretch to happen to the downside. Okay, so I'll be trading more towards a long, but I wouldn't trade it immediately long. So what I would then look for, so this is the first thing I'll look for, direction, bottom to top, okay, on a daily. The second thing I'll look for is a price pattern. Okay, and the price pattern, what I would look for is first a price action bar to go past the upper stretch line, which is this green line over here. If you're not sure of some of this, please go and revisit our other videos that we have done before. Okay, so that's the second thing that I would look at, which is waiting for a bar to cross the upper stretch line, giving me a signal that that is the bar that is signaling to me that the bigger range from the open is going to be towards the upside today. Okay, so that's the first thing. So that's the bar that did for me that. Okay, it went past the upper stretch line and closed above as well. That's good strength. Okay, the next thing that I would look for in my price pattern is I wait for a retracement. Okay, I wait for a retracement. And the retracement that I've got is something like this. So I've got a breakout here and then it retraces with two red bars to the downside. And at that point, I will start to look to take a position towards my bigger range from open, happening towards the upside. Okay. So as of now, what have I done? What I've done is I did put a pending order earlier part of the day. Let me see if I can put that here. Yeah. So I put a pending order for the high of this red bar, but it didn't get triggered. Then I moved it now more closer to this red bar and I'm waiting for my trigger to happen. Okay. And my stop loss being for the low of the bar. Why is that? As I said, I'm projecting I'm visualizing for the stretch to happen to the downside and a bigger range from the open to happen to the upside, and in line with my bottom to top move on the daily time frame. My 4-hour is kind of actually agreeing with that with an uptrend as well. Okay, so that's how we can use it in terms of the stretch and how we can apply it. So the second thing, you look for the price pattern, and the third thing what I usually look for is very important, is time. Okay, how much time is left for my range to happen to the upside? Okay, so over here I can see that the ranges of yesterday, you can see the ATR 10, the ranges of yesterday was 75. Usually I go for 80% of that range, and that is about 56 pips or 60 pips if you really do it to the T. And that's where my target is, where this red line is as of today. What happens if I do not get triggered and the stretch happens to the upside and it goes bigger range to the downside? That's not a trade for me, and that's not where my edge is. Okay, so that's what we do. And then you want to form another strategy based on that, you can do so as well. Just get one strategy right, keep trading it, and then go on to your strategy 2. Okay, that's what we do over here at Master the Markets, and that's how we teach very systematic, methodological to build sustainable, scalable, reproducible strategies so that we can keep spreading the truth of trading further. Okay, so this is what we have. So that's what I'm looking at for today. That means I'm basically expecting from the blue line this one to become the stretch, and then for price action to keep going up further to make this the bigger range from the open. We'll wait and see on how that turns out to be for today. Okay, right. So that's that in terms of the topic for today. So we looked at the stretch, what it is, why it's important, and how you can use it. Keep doing that as a homework. Apply that to different strategies that you may have. Apply that to even higher time frames. You can even apply the stretch principle even to a 4-hour time frame, daily, weekly, monthly. You can whatever that you do, and you can do time frame correlation on them. Okay, good. So I'll leave you guys with that one. Then now let's move on to the market update for today. Look at the different markets. Let's look at that.
For those of you who are unsure of your trader type, take our Trader's Personality Quiz today. This will help you trade strategies that fit your personality to achieve consistent performance. After the quiz, you will also gain a free video course that suits your personality to help you trade safely with low risk and high returns. Go ahead and click on the link below to take the quiz now.
Okay, cool. So let's look at the different markets now. Dollar Swiss over here, you can see a top to bottom move. Over here, open equity diminishing to downside. I'll be looking for more to the upside, some price pattern reversals. So let's wait and see on how that goes. In terms of dollar yen, on the other hand, open equity diminishing to the upside. So I will look more for it to the downside. In terms of GBP USD, open equity diminishing to the upside. I'll be looking more for to the downside, a reversal pattern happening, and for the downtrend to carry on. Euro dollar, on the other hand, you can see over here more open equity to the upside and in relation to the uptrend as well. Aussie dollar, on the other hand, open equity diminishing to the upside. I'll look more for it to the bottom. GBP yen, on the other hand, you can see open equity diminishing to the upside, looking towards the downside now. Bitcoin as well, for this swing, open equity diminishing to the upside, looking more for the downside. Reversals, Brent oil, the same towards the downside. Gold, on the other hand, more open equity now to the upside. It just broke out of its resistance level and just confirmed. FTSE, on the other hand, I would say it's kind of losing momentum, but still a bit more to the upside, open equity. Dow Jones, same as well, it broke out there. S&P, similar, I would say more open equity now, diminishing to the upside, maybe a bit of a reversal for the short term. Silver, on the other hand, you can see open equity diminishing to the downside. Might be cautious, do aggressive stops to maintain our profits, to preserve our profits. Finally, wheat, on the other hand, more open equity to the upside is what I can see over here. Okay, right, traders, so that's all on the market watch. In terms of our updates on our trading rooms, let's take a look at that. So you can see in terms of our elite room over here, we had a small loss on the primary runners, 20% OE, minus 1%. Other than that, everything else was flat. On the live trading room, we did take a little bit of a hit on both of this, 20% and 70%. 70% OE cash in, we made a small profit, 0.5. Overall, minus 1.5. Across both rooms, 1 and minus 5. I think we had a small loss over here of minus 2.5% across both the rooms. As we always say, keep the losses small, and so that when the big runs come, then we can override the losses. Okay. All right, I guess that's pretty much that in terms of our market update. We went through the stretch, went through the different markets, and went through the performance for the floors. I wish you all a great week ahead, a great weekend as well. That's right, great weekend, and then a great week ahead into starting off next week. Okay, all right, as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.
If you want to get notified every time we put a video up, especially on our live trading update videos, hit the subscribe button and turn on the bell notifications icon. This will get the YouTube algos to kick in and for you to join us in our mission to spread the truth of trading further, so that traders like you can benefit from our videos to trade like a master, achieve consistent performance, and change lives.